Now we will go to the concept of banking. Now, what is the meaning of bank? What is the purpose of bank? So, first of all, now you all know that we sometimes out of our income we don't spend the entire amount and we save a portion of it. So there are many who out of their income they save a part of their income. They are known as, so they have extra money at hand, so they are known as, extra means surplus spending units. So the savers in the economy, those who are actually saving, the savers of the economy are known as surplus spending units. And on the other side, there are people who make expenditures more than their income and they often fall in the deficit zone, that many times they don't have money for making all kinds of expenditures. So they are having deficit money. They are known as deficit spending units. Now what happens? The surplus spending units, they have excess of cash, and the deficit spending unit, they are in need of cash. But who will bridge the gap in between them? Suppose you are in need of money and I have excess money. Now, how will you understand? By only observing that the money that the person has got money at hand, I can borrow from him. And do you borrow from the unknown? Generally not. On what trust will I give you the money? So, due to this communication gap, the borrowers cannot borrow directly from those who are actually having too much of savings with them. Now, for this purpose, in order to bridge the gap, how to bridge the gap? Those who have the money excess, they can lend it out, and those who are in need of cash, they can borrow. So, for all this purpose, we need the banks. They are known as financial intermediary. Intermediary means when anyone comes in between and bridges the gap. So banks are known as financial intermediary, and they bridges the gap regarding what? Regarding the financial requirements of people. Now the savers, those who save in the country, savers in the economy, they deposit their money to the banks. The excess money they don't keep with themselves at home, but they keep with the banks. Now why do they keep with the banks? What is the interest of saving not at home but savings in the bank by opening an account? Because the banks, they give an interest. So if I store 25,000 rupees at my home, I will not going to have some extra cash at the end. But if I keep the same 25,000 at bank for a long time, then I am going to earn an interest amount, say 500 a year. Then also it is profitable because the excess money that I have, instead of storing at home, if I save it in banks, I can earn 500 cash without any work. So savers, they keep the money in banks with the aim of earning the interest. Now receiving interest only drives the people to save their money with the banks. Now what do the bank do with this money? Now the savers, whenever they need, they can withdraw the money. Like we have a saving account with the bank, but whenever we demand cash, we don't take the entire amount, but we take a part of it through ATM or checkbooks. So this cash which is kept with the bank is also withdrawable on demand. Now, the money which the banks receives, like there are so many savers in the economy. So everyone, if they keep in the banks has a huge store of cash. Now with the cash, what it does is it gives to those who is in need of money. So people, whenever we are in need of money, we go to the bank for loans. Now, if you see the businessman, they are always in need of capital or money because they have huge projects, huge investment, and they need a lot of cash at a single go. So, from where they will get such huge amount? They go and borrow from the banks. So, banks, they give the public's money to the investors or to the borrowers. Now, bank, when it lends the money, of course, the bank is filling the gap. Of course, the bank is helping the deficit units to get the money. It is helping the businessman to get the money in time of need. It helps us also whenever we require loan during the emergency needs. So, for giving the untimely benefit of money, the banks also charges back an interest. Now, this interest is often higher than the interest that they give to the savers. So, suppose the interest that the bank is charging is 9% and interest it pays to the saver is 2%. So, bank basically is profiting. How it is profiting? It stores the saver's money. It uses the money to lend out. So, it forms as an intermediary which bridges the gap between the savers and the investors in the economy. The savers have excess cash who have made savings, they keep with the bank, and the bank collects a huge fund and give it to those who are in need of money, the borrowers or the investors. Now, bank gives this kind of service. In return, what is bank's interest? All the commercial banks that you see, their interest is to earn profit in this way. By giving this service, they want to earn back profit. How do they earn back profit? When they give the loan, they charge a very high interest. And why do they pay back to the savers? Because bank has no cash of itself. Bank starts giving loan out of the deposits which are made by the savers. So there should be some incentive why the savers will go to bank and open an account and save. I can save my money at home. I can save my money with wherever I feel like. But why will I go and keep it with the bank and give the bank enough cash so that it can lend out and earn back profit for itself? And I am doing that because bank pays me a certain interest, maybe very little, but it at least pays back and increases my amount of money. So banks attract the savers. They cannot come and force you to open the account. But by giving the interest, they actually compels us to see what is the profitable scenario, whether to keep the saving at home or to keep with banks. And to get this interest, we go to the banks and save our money in the aim of earning this interest amount. If the bank never gave such interest amount, then why will we give our money to the banks? So for earning this interest amount, the savers keep the money with the bank. The bank gets the funding, and with the help of that, it loans out and earns the interest. Now, when it earns the interest, out of that, the entire cannot be bank's profit because it has to give a certain part to the savers. Those who are keeping money with the banks, those who are giving the enough resource to the bank for making all these transactions possible and to earn interest by the bank and to make profit by the bank. So, what is the bank's profit? The total, whatever it earns minus how much it pays back to the savers. So, it earns 7% of profit in the process. Now, this is very elementary example. Actual functioning is not that simple, it is a bit complicated, but for preliminary stage understanding this is enough. So banks are basically intermediaries bridging the gap between savers and investors. They give this essential service, and within this period of giving service they also get back and earns profit. How does they drive all the savers to keep the money in the bank? By giving a very small interest. Why do they give this small interest? Because they are here for profit earning. They make the entire profit out of our money by using that for loan and giving untimely benefit, and by charging an interest back they earn profit. But the entirety cannot be their profit, but maximum contributes their profit even if they pay a certain percentage to the savers. So this is bank's purpose. All the commercial banks that serves as general public's bank, they all engage and their purpose is to earn profit. Now, for being regarded as a bank, what I said, the three features to be acting as a pure bank. What are the three features? Number one, it should accept deposit from the savers. So we people have to keep money and the bank will accept the deposit. There are generally three kinds of deposit. We will come after this. Saving account, fixed deposit account and current account. Number two, now whenever we give the deposit, it is not that it is with the bank and I cannot demand it back. If I don't have my freedom to use my money, then why will I keep it with the bank? So the bank also gives the freedom that you can withdraw whenever your need arises. So the money can be withdrawn by the depositors through check. So whenever we demand, we can get the money back. So it is a kind of demand deposit. Number three, bank never keeps our money with itself, but its main purpose is to use the money for lending. So it uses the money for lending purposes. If all these three features are present, then only you can call it a bank. Now we will come to non-banking financial institutions. Now how does non-banking financial institutions differ from the pure banks? Now can you see the name? Non-banking financial intermediaries. So definitely they also serve as financial intermediary, but we cannot call them a pure bank because pure bank requires all the features. If any of the features is not accomplished, then we call it a non-banking financial intermediary. For example, post office, saving bank. Now you know that many people, they deposit, keep their money with the post office. They save over there. But that also means they serve as bank. But we don't call them purely a bank because whatever money we deposit with the post office, if we want, we can withdraw, but not such easy withdrawal it facilitates. And it does not use the money for lending purpose to the public. So whenever we can deposit with the post office, whenever we demand, not always, but we can get back the money from the post office, but the money that we keep there it does not use it for lending to others, but it uses it for its own purpose. Suppose the post offices or the government, because it's a government organization, so the government might need money. So whatever people save with the post office, it is not used for lending, further lending, but it is used for their own development work or development purposes. So it cannot be called a bank because it violates one of the feature. Now, if you talk about LIC, life insurance. Now what happens over there? They also accept deposit. They also use it for lending purpose. But can you withdraw the money whenever you feel like? No. So your withdrawal is not possible. So if any one of the feature of bank is not present, and if suppose other features are present but one of the feature is lacking, then we call them financial intermediary, but they are not banks. So the name is non-banking financial intermediary, NBFI. Non-banking financial intermediaries also act as a financial intermediary because they at least have one or two features of bank or of a financial intermediary. But why we call them non-bank? Because for being a bank, all these three features are mandatory. If any one feature is not present, then it is a non-banking financial institution.